So as the end of Q3 is fast approaching here, once we get to the end of September, the number one thing that we push all of our customers to do inside of Legacy Farmer and the ones that utilize our software called Farmer Metrics is to start tax planning at that time. Now, for a lot of you, what I just said, you're like, how in the heck do you start tax planning at the end of Q3? Well, the reality is when you have your numbers as well structured and organized as our customers do, you now have the capacity to do that. But inside today's video, I want to talk about the problems that you're going to run into when you do not tax plan appropriately, which guess what is about 99% of the ag industry. So let's get into it. So the first thing that you need to understand when it comes to tax planning, my friend, is there is a difference between reactive tax planning and proactive tax planning. You see, all of our customers practice what we call proactive tax planning, which means at the end of Q3, they are starting to think about tax planning. They are starting to meet with their accountant. They are starting to make game plans and decisions and figure out what they're going to prepay and things that they're going to buy in order to limit their tax liability the most. And the other thing is too, is we are being strategic about this tax planning as well. And what I mean by that is we are not waiting until get to the end of the year and buy things just to save taxes that we don't necessarily need inside the operation. I cannot tell you how many times in my career of just working with on the financial side of these operations over the years to where I've seen so many people get into major and massive financial problems because they bought things they don't need just to pay a little bit less in taxes. And these things though, I've seen those types of decisions over the years absolutely wreck and destroy farm operations and send some of them into bankruptcy because they took on all this debt and all this added responsibility. And then we had a downturn in market prices and they couldn't foot the bill or make the payments. So when it comes to proactive tax planning, we are being strategic about it. We are thinking about this months in advance and meeting with our customers are meeting with their accountant on a monthly basis, getting closer to the end of the year, because as they get closer and closer, we are fine tuning their numbers and fine tuning those decisions here as we get data from October and November and kind of find, those months get behind us and we have the final numbers from those months. That way, again, they're just proactive, right? We know what our tax liability is going to be 30 to 90 days before the end of the year versus the other side of this, which is where 99% of the ag industry lives, is the reactive tax planning world. Now, the biggest problem with being reactive when it comes to your tax planning, what this means is you are trying to do things when it's already too late, my friends. And this is the thing. When I was an ag loan officer, most of our customers at that time, they were doing what we call reactive tax planning, which means they were coming in after December 15th and trying to figure out how to get a side operating line of credit or make a big purchase in arguably one of the most busiest and vacation heavy times of the year for people and employees in a bank especially. And it just turned into a chaotic holiday, not only for them as a customer, but for also their banker, their accountant, and things like that. This is what happens when you are reactive. And the thing is, if you're watching this video, you most likely have been through that experience. My question for you is, how were you to be around at the end of that tax year when you were sitting in a place of absolute chaos and stress trying to figure out how am I going to limit my tax liability? How were you as a person? You probably weren't very good to be around or very fun to be around because you were so anxious and stressed out because there was a lot of dollars on the line at the end of the month. This is one of the consequences from being a reactive tax planner. Now, what's even worse than trying to tax plan between December 15th and December 30th is actually doing it after the end of the year, right? And you're trying to backdate checks and all this type of crap here that is guaranteed to not help you out at all. And it's just going to increase the level of stress and anxiety that you have going into the new year, because now you may be facing a massive tax bill because you didn't tax plan appropriately. And now you have this additional debt and things like that you're going to have to deal with going into the new year, when you know, just by simply having a little bit of tax planning and being a little bit more proactive than you were, man, you could have saved yourself a lot of money. And we have consistently over the years seen our customers save tens of thousands, some of them hundreds of thousands of dollars just by tax planning appropriately. But you can't be able to tax plan like this if you don't have your numbers structured and organized. And that is what our customers do with our software called Farmer Metrics. Now, the second problem here that we've already talked about just a little bit here are the problems that you are going to run into with your bank. Now, when you don't tax plan appropriately, it means you're most likely going to be going into your bank in the last 2 weeks of the year trying to get an extra $200,000, $300,000, $400,000, maybe $500,000 in financing to be able to go prepay expenses for next year, go buy a piece of equipment or things like that. And it never fails that it's always in the last couple of days of the year. That was just my experience of being an ag loan officer for 6 years. It always happened at the end of the year. It was super stressful, not only on the banker, but on the customer as well. And guys, this is just the problems that you run into. And so the thing is how do you think your banker is looking at your operation then? Again, you're not planning appropriately. You're not thinking things through. You're just not on top of your numbers there, which means you're a higher risk credit to the bank, right? So that's going to give them leverage on you to charge you a higher interest rate or not give you the best terms on the loan deal and things like that. So you are going to run into these issues, and it's a guarantee when you're not thinking proactively about your tax planning and what conversations you need to start having with your banker in October or November and not the last week of freaking December. You are setting yourself up for failure if you're trying to operate that way. But again, if you don't have the clarity in your numbers, you're not structured and organized like our customers are using Farmer Metrics, you don't even have the ability to go in and actually tax plan proactively and go in and have these conversations with your banker in October and November. And this is guaranteed to cost you tens of thousands, if not hundreds of thousands of dollars in taxes that you are going to inevitably pay. All right, guys, now the last part of this video that we're going to talk about are the problems that you are going to run into with the IRS. So it has happened time and time again where we've hit high grain prices, and a lot of farmers and ranchers have shown a lot of income in 1 year. And we could have had what's called a windfall year, where maybe you have government payments or you have 2 years of income flowing into one or whatever it may be there, to where you now have a massive, massive tax bill. And a lot of customers and farmers and ranchers will try to go ahead and prepay things or buy things again that they don't need, that we talked about earlier, and try to kick that tax bill down the road. Well, guys, guess what? I've watched this happen over and over again. And you can do this successfully for maybe 3, 4, or 5 years, but at some point, you are going to have to pay Uncle Sam. At some point, you are going to get caught up to, and you are going to be caught holding this massive bag that could honestly set your operation back several years. And the reason I say that is because I've seen this happen time and time again. And to some operations back in like 2015, 2016, I saw it sink the operations because they had all these things happen. It was like a perfect scenario here that came up to where they had all this income showing in multiple years that continued to kick that can down the road. And then we had low grain prices, and that tax bill came due that year, and they did not have the ability to pay the tax bill, and maybe they didn't have the equity on their balance sheet to be able to finance the tax bill either. And this is what I'm talking about, how these things can compound the further you kick the can down the road, because you're not tax planning proactively or the right way from the beginning, which is going to lead to massive, massive problems down the line for you. So you need to be aware of these things and understand the difference between reactive tax planning and the problems it causes, and proactive tax planning and the massive financial benefits it will give you over the long term of your operation. So guys, I cannot stress enough that this is the absolute best time at the end of Q3 to start tax planning appropriately and going in and starting to have conversations with your accountant, getting your numbers structured and organized, getting those things sent over. And then once October or November comes, you start having these conversations with your banker as well, and getting a detailed game plan put together so that your banker knows exactly what you're going to prepay at the end of the year, what amount of financing you need. And so that you can actually, for the first time, maybe just go enjoy your freaking holidays and not worry about the end of the year, take a couple weeks off and just go enjoy time with your family versus what you've probably been accustomed to, which is stressed out, anxious, you're worried to death, and there's a lot of money on the line, and you're just not a very fun person to be around, to be honest. So you don't want to have that happen. Now, guys, I cannot stress enough the importance of understanding the difference between reactive tax planning and proactive tax planning, and taking the time at the end of Q3, clear through the end of the year, to make sure that you're having conversations with your accountant and you are just on top of things. One company that we trust here inside of Legacy Farmer that we refer all of our customers over to is a company called Ag Accounting Services. This company thinks about tax planning the exact same way that we do, which is why our customers have been able to save tens of thousands, if not hundreds of thousands of dollars with their tax planning by simply having an accountant and a team that thinks about this stuff the same way. So if you're looking for a new account, my friend, and the one that you're currently working with in your town is just not really motivated or staying on top of things and doesn't reach out to you and things like that, simply go to agaccountingservices.com, reach out to that team, schedule a free call with them, and they will be able to share with you about their services and things like that. And ultimately, you guys can decide if you're the right fit to work together moving forward.